everyone. I'm Melissa from the Business Insight Center at the Central Library of Rochester, Monroe County. Thank you so much for joining us today. Please remember to mute your microphones and enter any questions into the chat. We'll be answering questions throughout the presentation. This presentation is being recorded and will be uploaded to YouTube. And if you've registered for the event, you will receive an email with the presentation slides. Just a reminder that all services of the Business Insight Center and the Carlson Center for Intellectual Property are free and available for appointment only. So we could help you with any kind of industry reports, demographics, consumer trends, trademark searches, any type of business research that you require to help with your business plan. We're your resource for all that. I would like to now introduce you to Gina from the Small Business Development Center.
Thank you, Melissa. Good morning, everyone, and thank you for being here. We have a robust program planned for you and one that's very specific. So I hope that you learn a lot and gain much from it. I'm Gina Mangiamelli. I am a certified business advisor with the SUNY Brockport Small Business Development Center. Our center is one of 20 statewide, but one of 1,057 nationwide. The SBDC program can be found in each state in the continental United States. The Small Business Development Center at SUNY Brockport here is the premier business assistance program serving the Rochester metropolitan area. We do cover 5 counties. We offer direct one-to-one counseling, which is free and confidential, and provides a wide range of management and technical assistance services, which include helping you build your business plan. We help with startups and existing businesses. We assist with loan packaging, organizational structures. We do webinars like this and in-person workshops. And we also assist with the certification for MWBE and service disabled veteran-owned businesses. And we look forward to serving you with any of your needs for your business. With that, I'd like to introduce our presenter today, who is Michael White, a construction risk advisor. As founder of the IFB Insurance Services, LLC, Michael White brings a passion for developing business relationships and understanding the true meaning of customer service. His pivotal leadership role is to facilitate construction contractors in achieving a surety bond that they need to elevate their construction business, a standing member with the New York City Surety Association. As a key external advisor to client companies, Mr. White takes personal interest in their success while always adhering to the highest degree of professionalism, confidentiality, and integrity. For Mr. White, the true hallmark of achievements is helping companies realize profitable growth. Proud to be a team member, Mr. White mastered the ability to create rapport across organizations and capture diverse viewpoints while developing custom bonding and resolving solutions. Mr. White has been at the forefront of business development and client service activities that have helped firms achieve phenomenal growth rate. Known for the determination and inexhaustible work ethic, Mr. White's reputation for finding cost-effective solutions to the most pressing bonding and insurance challenges. Mr. White and his team earned client praises by demonstrating the know-how needed to navigate the proposal's complexities. So with that, I am happy to introduce Michael White. Michael, take it away.
Good morning. It's a pleasure to be here this morning. And today's agenda, which we're going to go over, is going to basically point out some issues as far as with the SBA advantages, qualifying small businesses for surety, underwriting guidelines, bonding eligibility, bonding eligibility, introduction to the Capstream portal, which is a preferred surety, project mobilization embedded with surety bonds, and information on reaching out to my team. The SBA Surety Bond Program. Basically, the SBA, surety goes back to 1935, which is the Miller's Act, which is basically a federal law that requires contractors performing public work projects to obtain a performance bond as well as a labor and material payment bond in any for any contracts that exceed $100,000. Small states, county, other governments basically have adopted a thing that's called the Little Miller Act. The SBA advantages of getting a bond: low working capital. Unlike the standard market, which usually requires a 10% for working capital and mobilization, the SBA will only would look at qualifying you at 5%. They would take into consideration available bank lines of credit, which would impact a higher bonding capacity by using your working capital as well as your bank line of credit. And they will also accept internal financial statements like your QuickBooks.
Michael, can I ask a question?
Sure.
So that 5% you're talking about has to do with 5% of the total contract?
That is correct. So 5% of the total of whatever your total, 5% of your contract price is what they would take in consideration. That is correct.
Thank you.
Unlike the standard market where they will look at 10%.
And then those internal financial statements would be the balance sheet, income statement, look at their liquidity, things like that.
That is correct.
Thank you.
Business eligibility. 50% ownership or more in equity of your company. Majority stakeholder, able to block action of board and shareholders. Officer, members, partner controls in the stock widely held. So if you are the majority stakeholder in a business, you would pretty much be in control, and also you would have to sign the indemnity agreement, basically corporately and personally, in order to get a surety, in order to be provided a surety bond.
What is the indemnity?
The indemnity agreement is basically an agreement. It's a three-party. It's basically a three-part. Actually, I'm sorry. It's basically an agreement that's basically certifying to the surety that you will basically complete the project 100% according to the plans and the specs. So pretty much like a two-party agreement between an insurance company and the principal. An indemnity agreement is basically giving the surety a little bit cushion, saying that, hey, that you're going to be able to complete the project, and they feel confident that there will be no claims on the job.
Mm-hmm.
Business eligibility good character. Good character and reasonable expectations of completion. Need eligible bond and unable to obtain elsewhere in reasonable terms. U.S. for profit entities with legal U.S. owners and eligible to do business with the federal government. No current bankruptcies. And public tax and taxes and debt is basically current. So meaning that if you happen to have any tax debt with the federal government, as long as you have an agreement put in place, you could still qualify for a bond.
So, Michael, one of the things that you noted here was unable to obtain elsewhere with reasonable terms. Can you go into a little more detail with that? This is all for the SBA guarantee, right?
That is correct. So in the standard market, there are certain criteria that the standard market may not qualify you for a bond, being that you may not have being as though you may not have 10% of working capital. Could be some terms within the contract. With the SBA, they're a little bit more strict. They're a little bit more flexible. It could be that you may not have reviewed financial statements or a certain type of financial statement. So that's going back to the QuickBooks balance sheet, an income statement in order to qualify you for a bond, where the standard market say, hey, I may need a reviewed financial statement in order to qualify you for anything that's over $1 million.
Great, thank you.
You're welcome. Contract eligibility. With the SBA, there's usually there's a quick app for contracts that are up to $500,000. So if you have a project out, if you have a project that you're interested in bidding on up to $500,000, I can pretty much qualify you based on no financial statements or tax returns. It's basically a credit driven. It's basically a credit driven. It's basically a credit driven app. Then there's the up to 9 million on any project, which is federal, state, and local, which they just increased the bond amount from 6.5 up to 9 million, and also up to 14 million for any federal contract, which they increased from 12.5 up to 14 million. And that just recently happened. Contract eligibility. SBA basically accepts bid, performance, and payment bonds and maintenance bonds. Net total estimate, 100% of the contract price. Written bond requirements within the contract, meaning that there must be written within the contract language that a bid or performance and payment bond is needed.
So Michael, you might need to describe bid, performance payment, and maintenance bonds. We may not have those definitions and understand their context.
Okay. So most of the time, usually when you get a information to bidders or a request for bidders, in the specs, it usually calls for either a bid or certified check. So a bid bond basically pre-qualifies you, letting the contractor knows when you submit your bid to the obligee that, Mr. Obligee, I am qualified up to this certain dollar amount, or well, I am submitting my bid for this dollar amount. And if I happen to become the lowest and responsible bidder, I will provide you a performance and payment bond. The performance bond is basically covers the performance of the job, 100% according to the specs and the plans that you're going to guarantee that you're going to complete the project. The payment bond is there to protect any vendors or labor dispute agreements that are happening on the job. And on a maintenance bond, usually it's a 2-year, usually some projects require a maintenance bond up to 2 years. A maintenance bond is there to basically there to cover the maintenance of the project in case if there's any type of default on the products. Ineligible bonds, bid bonds where the project has bidded, substantially completed projects, standalone maintenance, subdivision, mining reclamation, commercial or fidelity bonds are all ineligible for the SBA program. Let's talk about the financial statement qualifications. Fiscal year-end financial statements are required. Jobs up to 1 million, an in-house financial statement is acceptable, which is considered as an in-house financial statement, a balance sheet, an income statement. Jobs up to 2 million require in-house plus or CPA compilation. Jobs up to 2 million, 1 to 6.5 requires a CPA review financial statement. Jobs over 6.5 million usually is a CPA audited financial statement. Not meaning if you do not have a CPA audited financial statement and you have a financial statement that has the presence of a CPA that's known for construction, putting together a financial statement, that would be acceptable. There's a 6 months interim financial statement that is due after the June period. So if you're within the August, September time frame, then most of the time a 6 months financial statement to see where you at on your performance halfway through the year. In-house plus and a CPA financial in-house plus equals pretty much a CPA compilation financial statement. What consists of a in-house financial statement is a balance sheet, income statement with age, accounts receivables, as well as accounts payable schedules. Every year, the SBA usually want your financial statements, which are due in 120 days. So as we look at 2024, right now, we're talking about is January, February, March, it's April. Pretty much after the tax period, which is April the 15th, you should be uploading you should have your financial statements for 2023. Any questions?
Actually, we do have a question that came up from one of our participants here that asked the question, what is the minimum surety bond required to start an agency?
What is the minimum surety bond required to start what type of agency?
I'm wondering if it's a surety agency. I think there's a translation service involved here, so maybe they could help clarify.
This presentation is dealing with construction contractors as well as contractors that's looking to do federal, state. We're looking to do federal work.
Right. So this is specifically for how to acquire a surety bond.
A surety bond.
That are involved. Yes. Yeah. Why don't you continue?
Additional requirements: 3-year business tax returns, a project work history, 5 largest projects that you have successfully completed, a personal financial statement for each owner, a current work in progress schedule, bank statements, preferably 3 of your most recent bank statements, and a copy of your general liability insurance. Contractor and surety fees. With the SBA and throughout, and usually with most surety bonds, bid bonds, there's no fee on a bid bond. And able to get qualified, you do not need to pay any fee for a bid bond. All bid bonds are free. Only when you are awarded and become the responsible bidder, you would have to pay for the performance and payment bond. which is 0.0% of the contract price to the SBA. You would pay that amount. That's separate from the premium that you pay for the bond. That's a bond, that's an approval for the performance and payment bond by the SBA, which you would have to go to pay.gov and pay that SBA bond fee. The application process. Here I got a little diagram right here to show you how the SBA bond fee, how the process basically works, where the small business seeks a bond from the SBA authorized agent. The agent seeks bond approval from the SBA partner surety company. The agent submits the bond guarantee application to the SBA. The SBA approves the bond guarantee application, and the agent issues the bond to the small business.
How long does that take?
Usually 24 to 48 hours.
Oh, wow, okay. So it's not weeks on end. That's
It's-
assuming that you have a complete application with all of the documentation.
That's correct. That's correct. And usually from the bid bond, usually once I qualify you for the bid bond, again, 24 to 48 hours, you have the performance and payment bond. Once the obligee usually interviews you and gives you a contract for you to give back to me, usually a 48-hour turnaround.
Right. Michael, we do have a question in the chat. Do you have experience working with drone contractors with issuing them bonds?
I never had an application or a request for a drone contractor.
They seem to
Could
be
I get it?
popular.
Could I get it done? Could I get it done? Yes. But I have not,
Contractors are
never
using-
had one come across my desk for that request.
I know more contractors are using drones for photographing their projects, the amount of work that's been done. I had a client that was a drone contractor like that, and it seems to be on the rise in terms of requests for that kind of service.
Now, there's two types of sureties, bonds out there. You have contract surety, which is basically construction, and you have commercial surety. So commercial surety is usually your DOT, your DOT street obstruction bonds, a drone bond, a liquor bond. Those type of bonds are considered commercial bonds. It's not a term. It's not a term. It's basically a renewal every year for that bond.
Oh,
I'm going to introduce to you a preferred surety that writes SBA surety right now. It's called Capstream. And Capstream is a project. Capstream is project mobilization that's embedded with surety bonds. And Capstream is aimed to provide project mobilization embedded with surety bonds. A bonding capacity is something that most small and emerging contractors would like to succeed. Through the Capstream portal, you will develop a surety partnership that will provide project mobilization, working capital embedded with surety bonds. Knowing you can get the necessary bid, performance, and payment bonds gives you freedom to bid on projects well suited to your strengths, not to mention the bigger projects with greater potential for profitability. But how can you build that kind of bond capacity? With Capstream, your profile and your business infrastructure will be underwritten through one of our specialized small business underwriters. So Capstream is a portal, which is a digital portal that you can go in which is a single platform for bonding and financing, which allows to give you access to capital, You can receive a financing agreement and project mobilization for loans. On the surety bond on the surety bond side, we can get you qualified for a bonding line as well as a bid, performance, and payment bond. What is CapStream? It's basically a one-stop shop to increase your bonding capacity. After creating your profile and sharing additional information with CapStream team, you will receive the following: financing commitment increases your bonding capacity, a bonding line, which outlines your bonding program, a bid, performance, and payment bond, so you can undertake more and larger projects, loans up to 20% of the contract price for mobilization. So basically, not only will we provide you your performance and payment bond by the SBA, we'll also help you get qualified and give you 20% of the financing for working capital of the contract price, all through the federal government. Who we help increase bonding capacity? Our unique blends of products benefit most contractors, including the examples below. Contractors currently using merchant cash advances, factoring, credit cards, etc. for projects. Contractors that are looking to undertake construction projects that lack the working capital for bonding capacity, meaning that if your bank, if you don't have the working, if your cash or your bank lines of credit are beneath the threshold for a contract in order to get approved for a contract, CapStream will step in and provide the financing to help you get over that threshold. Contractors that need project mobilization capital for upfront and direct cost. And that's pretty much it. Here's my contact information, which you can reach out to me or my colleague, and we can guide you along the way.
Right.
And getting you the documentation that and helping you along with the documentation that you need in order to qualify, so we can so you can get on the job.
Right. So Mike, so we do send the slides along with the link to the recorded presentation. So you will have Michael's information here. I also put it in the chat. So Michael, do we have some time to kind of unpack some of this a little bit? I know that clients that I've worked with, cash flow seems to be the biggest problem. And I can only envision with the Highmark Stadium and many of the Western New York contractors interested in providing some type of work for that Highmark Stadium. Some of them are small companies, and I have concerns about, you know, cash flow is king, right? So they need to have enough cash to have at least 120 days to cover payroll and things like that. So CapStream seems to be a solution for financing as an inclusive package. So you can do the surety bonding through the SBA, and then through CapStream, you can help them achieve the working capital that they need to get that project started and mobilized. Is that pretty much it?
Absolutely. Absolutely. That's pretty much it in a nutshell. So if you're like I said, if you're lacking the working capital, again, we look at project performances that you have done in the past, as well as your character.
Yeah, there's so much in the construction industry where you hear about people giving deposits of $10,000 and then the contractor never comes back. So there's always this risk involved. Not so much, I mean, the contractor who owns the business may very well have good intentions of fulfilling this contract, but we've seen lots of problems with hiring people. They think the work is too hard, so they walk off the job. I think, Michael, yesterday I shared with you, my brother and sister-in-law built a house, and it was delayed more than 60 days from completion because the contractor couldn't keep employees because they thought the work was too hard. So they would be hired, they'd work a day, and then they wouldn't show up again. He'd have to go through that hiring process all over again. And you had mentioned to me that if they had a surety bond, they could have been able to have a claim when those delays and things and lack of completion were done. I don't think people think about small contractors like remodelers, home remodelers, where there's a term and an agreement that I'm going to begin your bathroom remodeling on this day and it'll be completed by that day. And then it runs into long term. Maybe speak to that a little bit in terms of outside the commercial world, how a surety bond could help even in a residential situation.
Absolutely. I mean, if you're a homeowner and you're going for a construction loan out here where you're looking to build a new house or maybe do remodeling on your project, do remodeling on your home. I mean, even up to $50,000, or I would say up to $100,000, you're going out here and getting a bank loan. And what you want to do is you want to protect yourself. Keep in mind, the difference between a bond, a surety bond, and insurance. Insurance is a two-party contract. A surety bond is a three-party contract. So you have the obligee, which would be you as the homeowner. You have the principal, which would be the contractor, and you have the surety. So your price may increase a little, but that protection is there with the surety to say, hey, if this if you ask the contractor, can he provide a bond for you? Because that protects you, and you'd be able to sleep a little bit better at night, knowing that that project is going to be completed, and that contractor has someone out there that's holding him liable, that your project, your home, is going to be completed. And it's starting to show up a little bit, especially with banks out there, people that have this type of knowledge. They usually ask, can you get a bond before we give
Oh.
you the loan? So I'm surprised that, and it's going to catch on a little. It's going to catch on more. You're starting to see a few institutions reach out to me and ask, could I provide a bond for this contractor? And one of the things that a surety usually want, and what's going to be required within that request, is basically it's drawn out on an AIA agreement. So being as though, and an AIA agreement is a standard, it's a standard agreement from the Architect Institute, that basically every architect knows that he puts together a standard architect, put together the plans, and he will pretty much draw up this AIA agreement for you between the contractor as well as between the principal as well as the contractor. So a standard AIA agreement is usually acceptable with most sureties in order to get a non-commercial bond.
So
Or
AI,
I should say a non-commercial contract.
so AIA acronyms are always challenging. What does AIA stand for? Like what is
It's the Architect Institute Association.
Okay. So that's a standard in the industry which
It's a
protects.
standard. It's a standard in the industry, which
Great.
they give you all different bonds. You can go onto their website. I think it's AIA.com, and you can get that. You can get that contract.
Right. So some of the terminology that, some of it was familiar, but could you describe what you mean by factoring?
There are companies out there that have and this goes back to the days where a lot of the designer and fashion companies in the garment district would pay a certain type of would go into contract with someone to loan them money to to basically for the next season to come, which basically it's against your receivables. So if you're knowing that you're going to have $250,000 coming in the next 120 days, but you really need that you need that money now to move forward with your you need money now to move forward. There's factoring companies out there that would loan you money based on your receivables. I think could be 10-15% of the money against your receivables.
Yeah, I can remember when I worked for the railroad tie manufacturing company, we had Westinghouse factoring company. So on our receivables that were expected in the next 60 days, we could borrow up to 30% of those receivables to bring cash early into the company so that we would have working capital to produce the next set of ties. So factoring, I think, is not as familiar with most people as general commercial lending and things like that. So
And usually, mhm, mhm.
I was just
And
gonna mention,
usually, I'm sorry, go ahead.
I was gonna mention that for a lot of what you were talking about in terms of eligibility and the application with financial statements, tax returns, all of those things that go into looking at issuing a surety bond of some sort. It looks very familiar to what commercial lenders are looking for as well. So that makes it a prime service that we could help individuals with. So contractors that are looking to do work with the Highmark Stadium could make an appointment with the SBDC, and we could help walk you through many of those requirements as you prep and do a surety bond package to help you with maybe financials and things like that. So consider the SBDC as a service that we might be able to help you with that.
And you can go right online. You can go right online, right to the Capstream app, create a user ID and password, submit your information on Capstream. That information that you put on Capstream will pretty much follow you for the entire term of your business. Only thing, once you upload everything, you just follow up in 6 months or whenever you need a bond to update your work in progress schedule, to update information that update any projects you've completed, your project history. It's there. And the first time, the initial process, yes, it's going to ask you questions about your company history, your background, so we can provide the indemnity agreement for you, and any needs for working capital.
That's great. I think the biggest advantage is that you're inclusive, because otherwise they'd have to go to some other financing institution to get that working capital. So the fact that this is a total package makes it very inclusive and likely that you could help these contractors. What size contractors in terms of annual income do you typically service?
Typically, it's usually around anywhere from 500,000. I mean, I've written some large bonds out there up to 18 million. So my largest bond, I can probably say up to 18 million. My lowest bond is probably been about 250,000.
Okay. So no contractor is too small, or is there a,
There's no contractor too small.
okay,
No contractor too small and no contractor too big. Basically, I have basically we have basically as a preferred surety, we can pretty much fit you. We can pretty much tailor the bond that a contractor needs.
that's great. So Michael, this has been very insightful, a lot of terminology, a lot of interesting processes involved in this, but certainly not unachievable. It sounds like you've helped a lot of small businesses get their bonding that is necessary for contracts. And I know that there's a lot of hype around the Highmark Stadium going up in Buffalo right now, and I've seen an uptick in the number of contractors, whether they're painters, you know, like masonry, carpentry, whatever, it's really important to understand this process because you're probably going to be required to have some type of surety bonding in place if you're going to work on a project that big. So I'm going to leave it up right now. Does anybody have any
May I
additional
add,
questions?
Gina, may I add something as well? Contractors, and again, this new stadium that's going up, and I would probably, I would probably recommend and urge each contractor not to just focus on the bonding. Also, I would probably say you need to focus on and read your specs on the other additional costs that it's going to take to get on this project. And a few questions that you would ask, a few intelligent questions that you could ask when you're at these these community meetings, when you're working with the library as well, and they have these meetings, is insurance requirements. A lot of insurance, a lot of contractors may get jammed up and may not understand the insurance requirements to get onto this job. I don't know what your I don't know what your umbrella excess insurance look like. You got to understand contractual liability insurance, third party action over, um, pollution control. There could be pollution control insurance as well that's on this job. These insurances could be very absorbent. So ask the questions. Make sure you understand what it's going to take to get onto this project. Make sure you have, again, I see a lot of these jobs through OGS, through through the dormitory authority. Now a lot of projects is now calling for a 2/4, which is a 2 million single, 4 million aggregate versus a 1 million single, a 2 million aggregate. So make sure that you have your your percentages built in for your insurances as well as for your bonding. Definitely, I would probably say reach out to me or whatever surety agent you reach out to them and find out and get qualified, get bond ready, because you go to the Gilbanes, you go to the Turners, and you're talking about $5 million in bonding, and you may not have the capacity, or you may not have the working capital, or you may not have the reviewed financial statement in order to get qualified for a $5 million bond. So that's the reason it is definitely important to reach out to a surety specialist that understand the parameters of what it's going to take to get you on that project.
Good advice, Michael. We do have a question in the chat. I'm a small startup and new business. What is the best way for that person to begin? Best way to start?
First and foremost, I would probably say if you're going to get involved into construction projects, if you're going to get involved into doing city, state, and federal projects, most of those projects call for a bond that's over $100,000. So I would probably say, again, to build a relationship with me. Let's see where you at. Let's see what you're doing. Let's see what your goals are and what you're looking to achieve. There's programs out there through some of your through some of the towns that would help you get up and started. I would say reach out to the SBDC. Definitely go to the SBDC. They're there to help you. I mean, there's a lot of it's amazing how there is a lot of free. I'm not going to say, I don't want to say free, but I want to say there's a lot of professional advice out there that's right there at your doorsteps, and we take it forbidden as far as what's out there, and that's why these SBD centers are there to help the small and emerging contractor to move forward, so he can matriculate his business. Take advantage of it. And please, you have my number. You can always reach out to me. and we can get together with the SBDC, and we can process the paperwork for you.
Right. We also have joining us today is Paul Hoffman from the Western District SBA. Paul, did you want to add some things about the SBA program?
Sure. Thank you very much. Thank you for having me. Can you hear me okay?
Yeah.
Great. Well, I want to thank Mike for his presentation on the Surety Bond Guarantee Program. The SBA recently made some enhancements in that program, adjusted our maximums for inflation. So our dollar amounts for projects that we can handle is actually higher than what it was before. But also just keep in mind that certainly if you're looking for financing for your business as well, SBA is here. We're mostly known for our financing programs, whether that's lines of credit, which are critical in the contracting world, as well as our other term loan products. And I also would encourage everybody to work with the SBDC and yourself at the Brockport SBDC to try to make sure you've got good financial information, a good plan together. And so when you start going after these contracts, you have the necessary information you're going to need to provide to the surety so we can expeditiously process your requests.
Thank you. I do have a question. So, how important is it to have an award letter? So if I issue a bid and my bid is accepted and I'm awarded, let's say, a painting contract, does that painting contract document have to be included in all of the paperwork that goes into getting a bond?
I think Mike might be the best to answer that.
Yes, award letter is typically presented when you have pretty much sat down with the board or with the powers to be, which you go through an interview process and understand the terms and the understand the terms and the conditions. Make sure that you understand the terms and the conditions of the project. So usually it's a process. So once they give you the award letter, that's when that's when you should start moving forward with your surety agent to say, hey, Mr. Agent, I got this award letter coming down the pipe is going to be the contract. So once you get that award letter, usually the contract is right behind it. The SBA, again, the SBA, we can get the ball rolling with the award letter, but we're going to need, and usually within these organizations and usually with most city, state, and federal municipalities, they usually have sample contracts within the bid packages. So those sample contracts are they usually don't steer away too far from the sample contracts. Okay. So we can pretty much move forward with that sample contract. And once we get that sample contract, which is going to probably state that there's a performance and payment bond involved, then we can move forward with that. Somewhere down the line, I would request the original contract. But yes, we're going to have, like I said, most organizations, especially with this stadium being built, I'm pretty sure that there is a standard contract, but I'm pretty sure there's going to be there probably is going to be different contracts for different divisions. Okay. Something different, maybe it could be a difference from doing asphalt versus doing carpentry or electrical or plumbing or heating.
Okay, so you've mentioned a couple times in this presentation about interviewing. So if you enter a bid and they contact you, there's a sit-down interviewing process where they do like a one-to-one to like interview the business?
Everything in these bid packages, once you submit your bid, once you submit your bid along with the bid bond, there's certain requirements that they want within that bid bond package. So they're basically verifying, they're checking references, they checking the information that you've put into your bid package.
Okay,
So it could be a virtual, it may be a virtual, it could be a sit down, scheduled meeting, one or the other, but they're basically looking at your bid package and basically doing a cross check to make sure that everything, as far as what you said in that bid package, is pretty much
I see.
to confirm the information that you have provided them.
Awesome. Okay, that clarifies it. Thank
And
you.
then they may ask for any other additional information, but basically it's basically to confirm your bid package. Have you in the past 5 years, have you performed this type of scope of work? Please describe the type of scope of work. What does your back office look like? Things of that nature.
Very good. Awesome. All right. Any other questions? No? All right. If you do have questions, you will have, you can certainly email Michael. You can contact the SBDC. We can certainly vet any questions that you have. We want to thank you so much for joining us today. It's a complex topic, and hopefully you learned much from it. I know I learned a lot. It's not an area that I get a lot of clients looking for until recently, now that the stadium's going up. And would encourage you to check out the first Wednesdays. We have 2 more to go. We have a May 1st Wednesday and a June. Then we'll have a little hiatus through July and August, and we'll pick up again in September. So stay tuned and look for our next presentations, and we look forward to having you joining us again. Melissa, thank you for hosting.
Oh, thank you. That's the end of our program. I'd like to thank Michael and Gina for speaking with us today. A recording of this presentation will be posted on YouTube, on the Rochester Central Library website. We will email all registered participants with a copy of the presentation slides, as well as a link to the YouTube recording.
Great, thank you. Everyone, have a nice day.
Same to you.